is you bloody one out there, matey? That's my pirate impression. Hey, everybody, welcome to another weekly market pulse. Today is the week before Christmas, and it is the 20th of December. So I hope you're getting ready to have wonderful holidays with your family and friends and spreading love and cheer and all that other stuff that happens during this holiday season. So I hate to be the bearer of bad news, but we are red. And we've been red since, well, the last time I did this market pulse. And I'm going to show you what the heck is going on here. We just had this vibrant discussion about red. And so last week, this was the chart that I showed you, right? Everything was red, 4 red lights. That means don't be buying stuff, be protecting your account, all that kind of stuff. And this is this week. So you could see that this red market told you that this was coming. Now, I'm not always right, but you know what? This system does a pretty good job. And if you can just avoid a little bit of pain, it's like riding up the elevator and not riding it back down and then taking another elevator and riding it back down. It's like riding an elevator, getting off, taking the next one up, getting off, taking the next one off without going backwards. That's what we're trying to do. Easier said than done. I know. But market timing matters, right? You could see a week ago, we were just turning red and we had the huge, like a really bad day. We've had like one of the longest streaks of red in 50 years. All right. The NASDAQ composite, you could see that's heading down to the 50-day moving average here. It'll probably hit it, but today we're getting a little bit of a dead cat bounce. So these are temporary bounces that happen as capitulation happens, a little bit of capitulation, which means people are just throw up their hands and then the market makers come in and buy it. This is not a very strong candle, in my opinion. So I'm not sure if it's real. The S&P 500 is below the 50-day moving average. And yes, it's having a nice little bounce, but it made a new low today. The Dow Jones Industrial Average made a new low today on the heels of this big high volume candle 3 days ago, where it was down 1,100 points. And yeah, okay, it's bouncing, but it's got a lot of work to do. It's like what, 42,000? Got to get to 45,000. That's a pretty big bounce. That's a lot of work that it has to do. I'm not sure it's ready to do that work yet. I don't think the selling's over, but maybe it is. You know, that's why I use a market timing system, so I don't have to make that decision. New York Stock Exchange Composite is way below the 50 and probably heading to that 200-day moving average today, notwithstanding. By the way, today is triple witching day, I think. The third Friday of every quarter is this day that all these options expire, and the market looked bloody and red this morning, and all of a sudden, you know, we had a little inflation report that was better than we thought, and we're getting a bounce. So that's kind of cool. But don't get sucked into it because I don't know if the selling's over. Just be careful. The volatility index, this is what I call the panic index. You can see the panic index shot from 12 all the way up to almost 30 a couple of days ago. Now it's back down a little bit. Usually likes to be around these moving averages, the mean. But right now it's shooting up. That's a lot of scared people. There's people that are getting hammered out there right now. So you got to just be careful. You got to be protective, and we sell calls here. So we like to be in the money during these lousy periods of time. That's why I use market timing. All right, look at this crazy chart on the Dow. I think I mentioned that the Dow was the other one. This is the Dow. The other one was the S&P. So the Dow, look at this. How many days in a row slicing through the 50, slicing the 200, and at least recovering it back up to the 200-day moving average. I don't know if we're done, but that's a lot of selling from 17,845 all the way down under 16,000. Big corrections. Sorry, this is the Dow Jones Transport Index. It was the Dow that I was talking about. All right, the Dow Jones Transport Index, the reason I put it on here is because according to Dow theory, when goods are moving around the country, that's good. When goods are not moving around the country, it's recessionary for the Dow Jones Industrial Average. And the Dow Jones Industrial Average, I showed you, I screwed up the nomenclature on it, but I showed you this chart just a second ago. And now this is why, because the Dow Jones transports are getting hammered, right? That's a big correction. And so when goods and services are not moving as much, that means the economy quits moving money around. And when the economy, it's all recessionary stuff, right? Things are slowing down. Now we're all thinking Trump's in and everything's going to be great, but these things take time to unfold. All right, let's keep going. The biotech industry is making what's called the dreaded H pattern. So you can see that pattern there, and it's broken down and going lower. It looks like to me. And you know, when I see this pattern, it just jumps out at me on the screen like there's a lot of selling, and they're selling because of RFK. Like people are afraid that RFK is going to come in and regulate these guys, or at least make them be honest, or whatever he's going to do. But they're not very hopeful that it's going to do well. I think this 4028 is in play. This swing point. That's still a long way to go to get there. The the New York Stock Exchange disk drive index was doing great, and now it's just kind of fumbling around below the 50. Bounced back today, but below the 200, and that's telling you that people aren't going to buy as much technology, which is going to affect the QQQs and the NASDAQ. And, will it bounce? I don't know. It's still not that bad, but it's giving us some warning signs. Like it's having trouble holding those averages. That's tough. All right. The oil index is really giving us the warning signs though, right? This was at 2275 and now it's down at 1700, the lowest it's been in months, probably, more than a year. This is highly recessionary. Look at that dreaded H right there. Boom. As soon as it hit the bottom of that thing, the bottom fell out of it, right? It went from 1850 all the way down to 1700. There's trouble in the oil business because deregulation is coming in oil. Drill, baby, drill, or whatever Trump says. You're going to be doing all kinds of drilling. That's going to compress prices. It's going to compress margins. It's going to increase competition. It's all good stuff for the consumer, but the oil companies are going to be like, I don't know about this. We were doing pretty well for a while. All right, so Apple is on a breakout. It broke out here 239.50-ish, and you can see that was the breakout spot right in there, and it's been running up ever since. And even in this pullback, very not too bad. So, it went up to like 255 or something like that. It's 250 today. Nothing to worry about with Apple, at least right now. Here are the calls on Apple. Now, I'm going to show you the difference between why we sell calls on Apple versus why we sell them on other stocks. You can see Apple has that beautiful chart. I mean, that's a nice looking chart. Even though it's a daily, it's pretty straight forward, bouncing off the 50, just kind of cruising along. And then if you want to sell calls on Apple, you can go right here at the money-ish and pick up $1.92. That's, about 1%, 1.25% over here. Making it 1.25% a week is very not bad, right? 50 weeks, that's, 50, 60%. And it's a safe stock, but man, is it boring, right? It's boring. I don't know. Boring is good. Boring is a good way to make money. However, take a look at this. This is Tesla. Tesla broke out at the 270 level, had a gap up, and it's just been going crazy ever since. And even this week, where we had these big pullbacks, Tesla's been part of it on high volume, which scares me a little. But you know what? It was kind of bound to give some of that money back. So we sold in the money calls or at the money calls. I've been fairly deep in the money, and that's protected the account a bit. Now take a look at the difference between Apple and Tesla. Apple was giving you a couple bucks, $1 something. This one's giving you $14 in juice. That's $1,465 a contract at the money. Like if you got 10 contracts, you're making 14 grand a week, right? And that's 2 or 3% in the week. So, that really adds up quickly, but you got to be able to hang in there and ride that Bronco because Tesla is a Bronco. MicroStrategy, the ultimate Bronco. This is like a Budweiser horse, a Clydesdale and a Bronco put together. And then you add in like a Tyrannosaurus Rex. And now you got the MicroStrategy. So you can see the big breakout, leaving a gap on the chart. Gaps get filled. And then this thing goes all the way up to 543. It's kind of come back here, hit a low of exactly, this is the coolest thing, exactly the 50-day moving average. It's weird how stocks do that. Exactly, like to the penny, right there where that arrow is, right? And so now you're going to get a range probably established. I think it could go fill that gap. I just don't know when. Gaps get filled. Maybe it'll be next week. Maybe it'll be next year. I don't know. But it will get filled at some point. But meantime, we're just going to collect the juice. Look at the juice that is paid on this. The stock is at 352.75. And at 352, right at the money, it's paying $1,700 a contract. 10 contracts, $17,000 a week. It's like 4.5%, almost 5% a week, right? 4% a week at 50 weeks is 200% a year, right? Did I do the math right? I think so. So, there's a lot of money in stocks like this, but this is that crazy Buck and Bronco. So you got to be really careful. Okay, a few other names that people always ask about. NVIDIA. NVIDIA has this little support level, which it's right at, and it's just breached this little uptrend line here. And so it needs to get some strength to get above that. I've been saying for a while, if you've been watching me, that NVIDIA is in a little bit of a downtrend here. It's in a little trouble. It's in a late stage base. I don't see a lot of buying that's going to drive this higher. Sure enough, it hit 180, 153, and now it's back to 133. Now, it doesn't seem like a big correction, but if you're in it, it kind of sucks. But it needs some strength to get back up over that and establish that trend. Right now, it's in a downtrend until it proves us otherwise. How about that? You can see NVIDIA is kind of in between an Apple and a Tesla, kind of the way it pays juice. It's got $277 a contract, but of course, it's a lot cheaper. And so you would have a lot more. You might have 3 times as much as this. So you're getting $1,000 a week, something like that. Anyway, you get the point. The point is we sell at the money or in the money in these down markets and to protect yourself. Okay, a couple other quick ones, and I'll let you go and have a beautiful weekend and Christmas week. Amazon. Amazon is on a breakout, has been on a breakout since I made my video a few months ago and said 200 bucks is the breakout spot. It broke out, tested it, and then it took off, and it went all the way up here to what? 230, something like that. And now it's around the $223 level. Nothing wrong with Amazon right now, especially once we get through all this junk of selling that we have. Broadcom broke out on earnings, left a little gap on the chart. Dividends are coming up. Not much I could say. It looks pretty good. Relative strength is good. And then I'll leave you with this one. This is Alphabet. And Alphabet gapped up with that Willow thing. Remember they came out with that Willow quantum computing thing? I think it's going to be a big flub, at least short term. Long term, doesn't really matter what I think, but long term it's probably going to be okay. Quantum computing's here to stay somehow, but they got to be able to sustain this, and it's too expensive for them to do it right now. So you saw a big breakaway on that, coming back down, I think, to fill that gap at 178, testing that area. So I wouldn't be buying much right now because we're in a red market, but I certainly wouldn't be buying stocks that are not able to, to continue to break new highs at all. And we're not in the kind of market where things are going to break new highs. All right, enough yapping from me. I feel like after my mastermind call with an hour plus of yapping and talking to you, I've talked too much. So listen, maybe tell us what you think in the comments. I mean, I give you my opinion, but I'd love to hear what you guys think. There's all kinds of stuff in play right now. There's the government shutdown, there's inflation, there's a new administration coming in, there's Bitcoin hit 92,000 last night, but 108,000 last week. There's lots of things that are going on in the market, and there's a big shift going on in the market, but I think it's by and large an opportunity for us. Have an awesome weekend. Give somebody that you love a big hug and a kiss, and I hope you have a wonderful Christmas. And I'll see you maybe next week here on the Market Pulse. And take care. Happy holidays. Bye.